Legendary investor Warren Buffett has disclosed a stake in UnitedHealth. It's very refreshing to see, and I personally did not expect Warren Buffett to open his stake into UnitedHealth. Very, very surprising. But he's not really the only one. Michael Burry, which is another well-known investor, he put in 11% of his portfolio into UnitedHealth. Although many investors have said that this is a call option and it's not really 11%. But UnitedHealth was pretty much the most bought stock in Q2 of the 13F filings. So the Q2 quarter ends in June, and maybe some of them did sell, but I don't believe they did in 2 months. So Warren Buffett did open his stake. Michael Burry opened the stake. The stock is up like around 10% in the after hours. Nothing crazy because the stock is still down 46% year to date. I own a position. I've been covering the stock. And again, it's very refreshing to see very well-known, very much smarter investors agreeing with a lot of the things that we talk about on the YouTube channel. But for UnitedHealth, there's a lot of things that are changing within the company. The biggest one being the CEO, because the previous CEO, Andrew Whitty, he had his total shares, which were worth around 24 million. The current CEO, which used to be the CEO, Stephen Hemsley, he has $314 million worth of stock. So he has much more skin in the game. He is incentivized personally to turn around the company. And incentives in investing, they drive the outcome. So with the right incentives in place, the CEO is going to do whatever it takes to turn the company around. And the CEO is well known for issuing low guidance for the stock to go down. And then he starts buying back stock like crazy, and he beats on earnings per share guidance for the next 4, 8, 12 quarters. And this is what he might be doing here. He might actually be buying back a lot of stock, as UnitedHealth is sitting on a $60 billion cash position. So they have a lot of cash to be doing buybacks. And they will, if they're doing a lot of buybacks, they will likely beat on earnings per share guidance over the coming quarter, which could cause a massive change in sentiment for UnitedHealth. Now, UnitedHealth is going down for many different reasons. They have the antitrust investigation, they have a slowing business, they have many different things. But the main driver of the slow business for UnitedHealth is pricing. So they messed up on pricing. The pricing was too low relative to the healthcare costs that they were facing. So the solution for that is raising prices. And this is what the company tends to do. And this is what they said on the call. They said the primary driver of UnitedHealthcare's earnings shortfall for 2025 is that our pricing assumptions were well short of actual medical costs. Our current view for 2025 reflects $6.5 billion more in medical costs than we anticipated in our original outlook. And the things that they want to do is in 2026, the pricing strategy is intensely focused on margin recovery and moving back towards our earnings growth target. So they want to raise prices for them to make up for the $6.5 billion cost shortfall, and they're going to have to raise prices. Now, something else that they're also doing is they're exiting a lot of unprofitable markets and they're focusing on profitable markets for them. And they said that they made the difficult decision to exit plans that serve 600,000 members. That's a lot of members, but they cost them maybe a lot of money and it's unprofitable for them. So they're going to have to exit those plans. They just don't make any sense for UnitedHealth, even if they raise prices. So they're going to move on from them. And that's going to help margin recovery in a major way. So most of the problems of UnitedHealth is within their control, but you need a CEO for him to be able to do the right thing for the company. And the current CEO, Stephen Hemsley, he's well known for doing whatever it takes to turn the company around. And he has done so in 2013, 2014. And he could potentially do it again. Now, if we take a look at where the company is trading at, it's trading at 16 times earnings, 16 times forward earnings. For a company like UnitedHealth is dirt cheap. The company used to trade at 21, 22. It was being labeled as a safety stock, as a recession-proof, long-term compounder, dividend stock, but no one really likes it right now. Warren Buffett does like it. Michael Burry likes it. And many of those popular investors, they are buying the dip on UnitedHealth. So you're getting a massive discount on the valuation on historical average. But you're not just getting the discount, you're also getting a dividend. The dividend is the highest in the company's history, around a 3.3% yield. and the dividend is well sustainable. It's not going to be cut anytime soon, as the company has a 7% cash flow yield. So a 7% cash flow yield, and they're paying 3.3% in dividend. This is less than a 50% free cash flow payout ratio. So the dividend is safe. They will likely continue raising the dividend. They've been raising it for a long time. And, you're getting the dividend. You're getting a discount on the valuation, which is great for the company. And you're also getting earnings per share, which is expected to recover to 18%, 15%, 2026, 2027, and $60 billion of cash in buybacks. So the company right here is looking very, very interesting. And clearly, Michael Burry is seeing an opportunity. Warren Buffett is seeing an opportunity. And I've been saying it for a while, that outside a major kind of a settlement due to the lawsuit of the antitrust, if nothing crazy happens, like they don't have to pay $100 billion or something crazy, UnitedHealth is dirt cheap at this price, because most of their problems is due to pricing and due to their own mistakes. And if they correct their mistakes through the transition period into 2026, 2027, the company will get back to trading at 2021 times earnings. You would have locked in a 3.2% dividend, and you also have the buyback yield and many different things from the company. So this is my quick opinion on UnitedHealth. I've done so many videos, so I'm keeping it short. I hope you enjoyed it, and I hope you liked it. If you did, please press the like button and maybe consider subscribing. So I'll talk to you in another video.